Welcome to Texas Property Tax Strategies with Chris Tejeda.
Welcome to Texas Property Tax Strategies with Chris Tejeda. Chris is an attorney at Boling Tejeda, PLLC in Allen, Texas, where he focuses on commercial property tax disputes and litigation. Chris works with business owners and real estate investors across Texas to challenge unfair property tax assessments. I'm LeAnn Lyon, and today we are talking about how property values are determined in Texas and what goes into the numbers property owners see on their annual tax assessments. Hello, Chris. Great to see you again.
Good to see you again, LeAnn.
Thanks. Say, Chris, who is responsible for determining property values in Texas, and how does that process begin each year?
So property values in Texas fall under the purview of the county appraisal district located in each county. In Dallas, that entity is called the Dallas Central Appraisal District. In Collin County, it's called the Collin Central Appraisal District. Now, there are some variations to the name. Some counties like to be unique. For example, Tarrant County calls themselves the Tarrant Appraisal District, no central. And in Bell County, down near Central Texas, they call themselves the Tax Appraisal District of Bell County. No matter what their name is, the process begins each year with a valuation of each property in the county. Now, as we talked about in episode 3, this involves using mass appraisal techniques. Once the district sets a value for your property, they will then send out a notice of appraised value.
Okay. So what valuation methods do appraisal districts use when determining the value of a property then?
So there are a number of valuation methods that are used, but there are two major techniques. One is called the market value approach, which consists of the comparable sales data approach, the income approach to value, and the cost approach, to name a few. The Central Appraisal District may also use the equal and uniform approach, often called equity valuation, which is a valuation method that compares the subject property to a reasonable number of comparable properties that have been appropriately adjusted to mimic the unique characteristics of the subject property being valued.
So for commercial properties, how does the income a property generates factor into the valuation?
So for commercial properties that are income producing, such as hotels, offices, and other properties that individuals and business typically rent or lease, fluctuations in their annual income streams can affect the value. These properties are based on the amount of income they produce. So for example, hotels are valued based on the number of rooms they rent per night and per year, the revenue that comes from each available room, and the expenses associated with renting out these rooms. It's similar with a retail strip center. Each tenant in the space pays rent to an owner or a landlord. All things held equal, a property that generates more income than another should be valued higher than that property that produces less income. And that's the gist of it.
Excellent. So how do factors like property condition, location, or vacancy influence how a property is valued if it's different from what you just said?
So these are all examples of individual characteristics that could affect the value. Condition is an easy one. A property in a good or excellent condition would have a higher value than a property that is similar but in a fair or poor condition. Think about residential homes. If a home has been well maintained and been repaired as needed, this would probably command a higher appraisal than if the exact same property was next door but falling apart. Of course, we all know about location. Traits such as location near amenities, in certain school districts, or in certain zip codes may command a higher market value. I grew up in the Dallas area, and I grew up in a city called Mesquite, Texas, which is in the southeastern Dallas County area. Unfortunately for me, a house that is in Mesquite would sell for a lower value than the same home that's located in Highland Park, Texas, which is a very affluent neighborhood with very, very few homes, if any, that are priced below $1 million. Vacancy and occupancy also affect the value because if a space is mostly vacant, it is not generating the same income that a property would if fully occupied. These and other unique characteristics of property are areas of emphasis when fighting erroneous appraised values.
So, how do appraisal districts update property values, and what information are they typically relying on when they make those updates?
Under current Texas law, each appraisal office must reappraise every property in their county at least every 3 years. Now, there are some properties that are exempt from this requirement, such as properties that are newly constructed or properties in a newly annexed jurisdiction. The timeliness of reappraisal, however, has been up for debate in recent years, with property owners asking that the values be held for at least 2 years before reappraising, although many taxing entities would like to receive reappraisals every year to account for changes in the market. Now, when these values are updated, a lot of the same information is used from prior appraisals, whereas they collect sales data, they collect data about building permits and things that are going on, and they use that data to update their mass appraisal models so that the values are consistent with the things that have recently happened.
So, keeping that in mind, you said every 3 years, but things can change drastically even within 1 year in terms of, well, all sorts of things if a hurricane comes through or whatever the case may be. So, appraisal doesn't necessarily mean it's always going up. Sometimes does the valuation actually come down?
Yes, absolutely. This is particularly true with income producing properties such as hotels. And if we go back to our COVID example, there were many hotels that for the tax year 2020, which was the year January 1st through December 31st of 2020, there were properties that had hotel values that were millions of dollars higher than the 2021 value, which accounted for the massive loss of income from these hotels. I dealt with one hotel that's a very popular hotel in downtown Dallas, and the value was essentially cut in half due to the fact that during the COVID year, they had very, very, very little revenue. So the value went from well above $25 million to about $12 million in 1 year. Now, since then, that property value has recovered because the cash flows have increased again. But that's just one example of how a property value can go down if it's warranted by the evidence.
And can that property request a new valuation, even if it's not required by the county?
It's very hard to request a reevaluation outside of the normal situations in which the appraisal district will do a reevaluation. However, this does place even more emphasis on protesting your value each year. Because when you do protest, it's almost like you're asking, hey, look at this value again and make sure that it's correct. Here's some additional evidence that you may not have seen in hopes of getting that value lower. And so again, it's very important to protest because it is like a mini reappraisal for your property.
Excellent point. Thank you. Are there situations where appraisal districts may rely on outdated or incomplete information when determining value?
Yes, there are several examples of this. In short, things change. Tenants change, cash flow change, markets change. And for these reasons, the value entered by an appraisal district may be relying on data from the past 12 months, even though there have been significant market changes that have occurred in the past 6 months. Furthermore, there is some sales information that is private or confidential that the district is unable to obtain. Gaps in data create gaps in appraisal. When finding an appraised value, it is important to present information as close to January 1 of the year in question as possible to help protect against these things.
So if a property owner wants to understand how their specific property was valued, what information are they usually able to request or review?
Well, in cases like this, the first thing I say to do is to protest your value. This is the guaranteed way to see the underlying information that supports or does not support the valuation of your property. By triggering the protest mechanism, the Central Appraisal District is required by law to give you the underlying information used to set your value. But please note, the information received is a result of the mass appraisal done on the property and may not reflect the individual characteristics of the property. Furthermore, the information you receive, such as info on market rents, market expenses, and sales data, may not be 100% reflective of your property. And thus, it is very, very important to point out why your property is different if you want to get a value reduction.
So as we wrap up today's episode, from your experience reviewing property tax assessments, what are some red flags that indicate that a property valuation may not accurately be reflecting the true value of the property?
Sure. As a property owner, the first thing that you will want to look at is the amount of the increase from a prior year, especially if you own the property for a long time. Now, the way the market has changed since 2020, there are more standard increases that we see across the board. I would say generally right now we're seeing increases year over year of 20 to 30%. But if you look at your notice value and you see that a percentage has increased 40 to 60% or higher, there's a good chance that maybe something in the mass appraisal technique used put your property at a value higher than it should be. Now, this is not to say that, your property did not do better. Maybe it increased its rents. Maybe you had more tenants. But a lot of times the increases that we are seeing are drastically above the increases that are warranted by the market. So I'd say the first thing is if you see a huge value increase in your property. Another thing is if you are continually being reappraised every year, because remember, although the state requires that the central appraisal districts reappraise at least every 3 years, they can reappraise every year if they would like to. Now, generally they do this when they see dramatic shifts in the market, but maybe they missed one. And so it's up to you as the property owner to step forward and say that, hey, there are things that are going on in the market that are not going on with my property, and point out those distinctions to set your value at an accurate level.
It seems like that's a lot for a property owner to keep on top of, in addition to, running their business and all this. Is there what would you tell somebody about how to stay on top of all of this year after year?
Sure. The best thing to do, in my opinion, is to hire someone who is called either a tax agent or a tax consultant. These are people who are licensed by TDLR, the Texas Department of Licensing and Regulation, and they are certified as experts in property tax. These people start off with tons of training, and in fact, when consultants first start working, they are required to work underneath a senior consultant until they have the knowledge, skills, expertise, and training necessary to go out on their own. These people's job is to go out and ensure that you have the most accurate and fairest valuation that your property can have. And this is all that they do. Not only is this their job, but they have access to numerous informational databases that will give them even more data points in order to go in and fight the values that are set by the appraisal district. So I encourage all of my clients, if they don't already have one, or if they feel like they're overwhelmed by the valuation process, to go out and hire a tax agent who is licensed by the state, who can help you ensure that you have the fairest, most accurate value out there.
Well, thank you for that. Well, that is it for today's episode of Texas Property Tax Strategies with Chris Tejeda. For anyone listening who believes their commercial property may be overvalued or wants to better understand their options, you can learn more or contact Chris at bowlinglegal.com. Thank you for listening, and be sure to like, subscribe to the show, and leave a review if you found this episode helpful. Thank you, Chris.
Thank you. Have a good one, LeAnn.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.